Welcome one and all to Global Money Talk, brought to you by SamPro TV. Greetings as always to all of our viewers from across the United States, Korea, and all around the world. We are coming to you live from the trading floor of the New York Stock Exchange here in New York City, the financial capital of America. I'm JD Durkin, and joining me today for our market briefing and to weigh in on some of the top stories of this Wednesday is Tai Wong, independent proprietary trader. My man, good morning.
Good morning, JD.
What a day. So first, before we get to the markets and the data and stuff, we like to talk about the fun stuff. It's October 30th. What's top of mind for a day?
All right, for today, special day, John Adams' birthday.
Huge.
Second president of the United States, big shoes to follow after Washington. He was a good man, an unbelievably smart man, but a stubborn bastard, and he only got to serve one term. Nobody knows much about him, but except for the lyrics in the Hamilton musical where King George goes, "That little man, they will eat him alive." So he got a little bit of a rebirth there. So John Adams, and then also Ivanka Trump, kind of timely, I guess. So she's been quiet this this cycle, and of course Henry Winkler, aka the Fawn.
Of course. Happy birthday, one and all.
Yes.
To all of them. John Adams defended the British troops. Foundational to our judicial system. The idea that you are innocent until proven guilty. You have a right to legal counsel. Not a popular decision when John Adams was there before his presidency, but he's like, no, they deserve a lawyer. If they're being charged, I'm going to be their lawyer. One of my favorite parts of John Adams'
That's a wonderful
legacy.
story, and in part it shows how, he was a very resolute man, believed in what he believed, and it made him sort of politically unpopular, but you're right. And then there's a wonderful story that we don't really have time to go in there, but he and Jefferson were bitter enemies after 1800, after he lost the election. But they both died on the same day, July 4th, 1826, and by then they had become the best of friends again.
Isn't that amazing?
Yeah.
That they both died on the same day, just a few hours apart.
Yep.
Also today in history, Muhammad Ali wins the Rumble in the Jungle
Ooh.
over George Foreman. Listen, see, now is the third day in a row that you and I are doing this, so now I'm coming prepared with a little bit. I know how you roll. Also, very controversial question. Sets the tone for the show. Are you a fan of candy corn?
I'm not, actually.
Okay, not a wrong answer.
Might be candy corn day, isn't it?
It is Candy Corn Day, of course. It's the day before Halloween, October 30th, so happy Candy Corn Day, one and all, everyone out there who is celebrating. Let's talk about these markets, Ty. How are we looking here? The S&P's been kind of back and forth. It is in positive territory, albeit a bit fractionally. Similar story for the Dow, 30 components, up about 0.3%. The tech-heavy NASDAQ holding on to some fractional gains. We're seeing strong performance from a lot of key consumer services names. That's the sector that's leading the way. Bit of a pullback today for healthcare technology stocks. NVIDIA's kind of struggling. Of course, as we know, Ty, as soon as you have those more highly concentrated names moving one way or another, they tend to move not just one of those 11 sectors, but the overall market as well. And that leads us to a few huge names like a Meta and a Microsoft set to report later on today after the bell.
Right, right. And you'll see, I think part of it is there's so many sector ETFs now that, if a big name in the sector has a bad day, it might draw people to pull money from that sector into another sector because it's so much easier now than it ever used to be. So I think that, as you say, that sometimes the whole sector gets hurt by a big name. All the home builders yesterday got hurt by D.R. Horton.
That's right. We talked a lot about D.R. Horton yesterday. The strongest performing Dow names today, Visa having a very strong day, up about 3.5%. American Express, we're seeing a lot of these kind of key financial services names do well. Amazon's also up and to the right. Boeing having a nice little bounce back. Obviously, a lot of struggles there. But let's go to this viewer question that I know you got yesterday regarding tariffs and revenue. What was the question, and what is your response to that question?
So I'm really glad to have the question. If any of our viewers have questions, send them in, put them in comments, and we'll try to get to them. But this one is from a student at Hillsdale College, a wonderful college, by the way, in Michigan. And the question was, why shouldn't we're talking about, why shouldn't the Fed cut rates when tariffs are going higher? So take a step back. When originally Trump put the tariffs on China, there were about 25% tariffs. And the Chinese dealt with that on what's called the 888 sort of strategy. The 8% of it was they weakened their currency. The other 8% was, so it's kind of a subsidy from the government a little bit. And then the last 8%, the companies ate themselves. So they kind of got away from that, and the Americans didn't really see a boost in prices. But if tariffs go up dramatically more, we're talking about 50, 65% tariffs on some goods, they're not going to be able to, consumer in the United States won't be able to be shielded from that by companies eating it, by the currency. So that could generally have the effect of pushing up prices. And it's not just on China. It could be, foreign cars. If we put one on cars made in Mexico, or luxury cars from Germany, that's going to generally raise the level of prices. And the Fed doesn't want to be cutting rates in the face of rising prices. So dramatically higher tariffs kind of handcuffs the Fed a little bit. So I really think they're trying to sneak in as, sort of 100 basis points of cuts, and then they'll sit back and see what happens. They may have to sit on their hands for a long time, and I think they're praying that they won't have to raise rates.
When you say sneak in those cuts, is that before a potential Trump presidency? I mean, we went through those numbers yesterday you brought us, where some analysts think, hey, by as soon as March of 2025, under another round of Trump presidency, you could really start to see these tariffs rolled out in a pretty sweeping fashion.
So we've already had 50. I think we'll get 25 next Thursday.
Sweet, yeah.
And then the December meeting, because the Trump administration won't have gone in, I think they will tuck in another 25, unless some odd things start happening. Then they'll get 100 basis points. They'll feel that, at 4.25, 450 basis federal funds, it's still going to be in restrictive territory, and then they're going to sit back and see. That's my view. Get 100 basis points in, and see where we are, as the new administration comes in.
96.2%. That's the statistical likelihood right now, at least according to CME Group's FedWatch tool, of a cut of 25 basis points next week, which, by the way, we very rarely get FOMC decisions on Thursdays. We usually do a Tuesday, Wednesday meeting, but it's election week.
Exactly.
Anything goes in Washington, I think, and they're kind of like, let's just bump it a day. We're going to go Wednesday, Thursday this time.
Yeah, but they got to vote. Right? They got to go and vote.
They got to
right?
vote. Listen, they're
Absolutely.
citizens too. They got to vote. I want to ask you a little bit about Alphabet and Google stock.
Sure.
This is one of the earnings we kind of previewed. We talked quite a bit about in our broadcast yesterday. Stock up big today, driving communication services as a sector higher, like we mentioned. Strong revenue growth, specifically from the company's cloud business. I wonder, Tai, were you able to look through anything kind of jump out to you, either from what the company had to say or any surprise in terms of how the stock is performing so far here today?
So what really, I think, encouraged the market is how well the cloud part did, because search is really sort of a mature business, and they're fending off sort of antitrust and concerns about that. But cloud, they've been investing billions of dollars into it, and they will continue to do so. That's done very well. But one thing that did jump out, and of course that helped the NASDAQ to an all-time high, I believe, at least certainly after hours, 25% of their code, according to their CEO, more than 25% of their code is now written by AI. So I'm sure somebody, or at least I hope somebody, checks out the code before it pushes in, so we don't have the CrowdStrike problem that we had a couple months back when the world froze for a little bit. But if you're a computer science major, I think you should continue to be a computer science major. But you have to think that your job going forward may be a little different than you think it, than what you think it might be. You might be just riding herd on a lot of AI.
And of course, even when you talk about a company like Alphabet and a handful of others, these are the most consolidated, the big four customers of NVIDIA's client base.
That's right.
So this all comes back to NVIDIA. And I get so many questions about why is NVIDIA so big? How is it often growing? It's such a large percentage of NVIDIA's revenue is coming from a company like Alphabet. So to your point about the sort of outweighted percentage of how much of cloud computing or search is coming from these large language models, there is a company at the other end of the tunnel that's sitting there waving their hands, saying hello, saying, hey, we're willing to be a big player here as your AI ambitions grow. We got you on the back end.
Interesting you mentioned that, because NVIDIA has a pretty big moat right now, because their chips, their Blackwell chip, their new one, is so much better at this, sort of doing the parallel processing than a lot of the other chips. But I did notice a headline yesterday that Broadcom is now working with OpenAI on a new AI-specific chip, which could be eventually a competitor to NVIDIA. So big moat, but certainly in that space, your moat sometimes doesn't last as long as you think it will. I mean, you look at somebody like Intel, the king, half a dozen years ago, and mightily struggling right now.
I want to get your perspective on some of the key pieces of data we got today. ADP, I mean, to me, I always kind of talk about ADP with a bit of a grain of salt, because oftentimes we have this big mismatch between private employment data figures we get on the Wednesday of employment week versus the Friday number. They could be dramatically different numbers. They could be comparable, But we knocked the cover off the ball with ADP today. 233,000. We were expecting closer to maybe 115, 120 and
Right.
change. What do you make of the
doubled
ADP
it.
figure today?
That was a big jump. And ADP in recent months is not last month, but I think tended to be weaker than the signaled more weakness than the employment report did, and that's why we all take it with a grain of salt. But the one thing about ADP is these are actual payrolls. These are ADP customers.
Right.
And, I've gotten checks from ADP because these are real customers. Whereas the payrolls report is kind of a survey, but then an overall survey gives you overall general picture. And as you mentioned, these are private payrolls. So this should be encouraging because a lot of the growth, as one of our Danielle Booth, who was a guest on our show a few weeks back, said a lot of the employment growth has actually been just education and health and sort of public stuff. So it doesn't show so much underlying strength. But this is a pretty interesting number. So we'll make Friday's employment report very interesting. I would also say that the market didn't really react to the big number, in part because, as you saw, 96% of the people economists really expect a rate cut. So there's really no change there, and which is why we didn't get a big move, because that typically would you should see a big move in bonds and other sort of current and other commodities on the basis of that. But a big number. The other thing I would mention is while we're on data, mortgage rates up 21 basis points. It's the 30-year mortgage is 673 right now. That's pretty high. Mortgage applications flat. I think they're going to be sort of not too many people are going to be taking mortgages at this point because they expect the Fed to cut.
Right.
Perhaps a lot more than the 50 basis points that we see in the next 2 months. They may or may not get it. So one of the things that I'm a little concerned about is also Caterpillar had a really ugly miss. Opened much lower, rallying. I think there's a little sort of bargain hunting there, but they make the big machines, right? The big industrial machines, that are used in other things, but also used in construction. So construction is still sort of dormant given the general high level of rates. So for parts of the economy to really get going, we do need rates substantially lower. We just don't know we're going to get it.
Love to ask you about Boeing. We talked a lot about it yesterday. Now we got this, well, first of all, striking union holding its first meeting since the latest round of contract negotiations were rejected. The union representing about 33,000 striking U.S. West Coast factory workers meeting. We've also got the stock offering, could raise north of 20 billion some odd dollars here. What do you make of that? And I think the stock is up about 1% and change, but you're still talking about a company whose stock is down nearly 40% year to date here, Ty.
Right. I mean, Boeing's a company that really in the past few years haven't been able to do anything right. You had the two Max crashes, and just when everything was going well, you blew a door off Alaska Airlines. Right? I was actually flying Alaska Airlines that day.
Were you?
Just not that plane, so didn't have to clear my sinuses that way, right? But they've been really struggling, but it's encouraging that at this 150 level they raised $21 billion, most of it in equity, and the stock is steady and is rallying. That's a pretty good sign for Boeing, and I do think that the machinists are now thinking, Boeing's digging its heels, and with an extra $20 billion, they can have months and months more of burn before they really have to, potentially settle. And there might be a thought of, maybe give us a little bit more, and we'll get back to work. We have governors of states like Utah and around there, whose businesses have been hurt and are asking for, we would really like you to finish this strike, because it's 3 different states saying, our people are getting laid off because they're suppliers to Boeing, and Boeing's not buying stuff because, again, they're trying to conserve cash. So maybe Boeing's finding a little bit of a base there, and if we do get some kind of resolution, we get a reasonable rally in the stock. I'm not sure it's 200, but 170, 175, certainly a relief rally. I think there's a fair amount of shorts as well as poor sentiment. So if you turn that around, I think there's a little potential for a trade in Boeing. I don't know if it's a long-term investment yet. And the last thing I'd say is Kelly Ortberg came out of retirement to do this job. So he doesn't. It's not like I have a 20-year runway. I'm gonna try to turn this thing around. I'll do what I need to do, because you know what? I can always go back into retirement and be absolutely fine.
The challenges exist for the company in order to continue to try and strengthen finances, to your point, but also you just got this general public relations, this is right, perception drives reality. You just got a base level perception challenge with the company right now, where there's just you have a little bit of a knee-jerk reaction. Maybe if you're an investor, you're a government official, these contracts, whatever it is, it just kind of seems like every time we've talked about Boeing for the better part of the last 12 to 24 months, it's not in a good way. It's not associated to a good story. Like, what's happened now with shares of BA?
Well, you know, the motto used to be, if it ain't Boeing, I ain't going. And
I've never heard that before. Yeah. That's a thing?
Back in the day, because Boeing was, was such a great, plane maker.
Sure.
And now it's probably, if it's Boeing, I'm not sure I really want to go.
Yeah.
But, what you said about perception is so important. And there was just recently, a little off topic, but I think it's worth talking about, is the Washington Post declined to endorse a candidate in the presidential election. And the Washington Post, which has gotten sort of very, very one-sided. Now I talk from a specific side of the aisle, but I think it's gotten quite one-sided over the years, to the extent where I could look at a headline that came across the Bloomberg, and I didn't have to look at the source. I just knew who it was because it was WAPO, because of the way it was written. So I think they've had like 200,000 subscription cancellations, a couple of resignations, and Jeff Bezos owns the thing. Jeff Bezos, that's walking around money for him.
Yeah,
he
I think he'll be fine.
But what he came out and said was, because we have we have two jobs here at, as news in the Washington Post. We need to have accurate and unbiased reporting, which is work in itself. But we also need to have the perception that we are accurate and unbiased. And by endorsing political candidates, we're failing at that. It gives the impression of bias, and I don't want to do that. And several newspapers, big newspapers around, have done that. In this cycle, whether it's a concern that if they endorse Harris and Trump wins, Trump is going to say, yeah, you're banned from the from the press conferences for a year. He'd do that, right?
Sure.
But I think
and if you're Bezos, if you don't mind me saying, obviously your government contracts with Amazon Web Services, with groups like the NSA, that's its whole own multi-billion-dollar industry. Your contracts with Blue Origin that you got with the federal government, it's a whole own other multi-billion-dollar industry. So you are so deeply entangled now, and this is part of the challenges for newsrooms, which more and more have private equity owners. They've got private billionaire owners who have all these other companies, and we're sort of dealing with this merger and consolidation space where even our editorial efforts are inextricably tied, whether they want to be or deserve to be or not, with these power players like a Jeff Bezos, who's going to sit there and say, I have to play the game for my shareholders, for my employees, for whatever, with the incoming administration, no matter who that is.
And he also said that typically, when you poll a group of people, who do you least trust? It's almost always Congress is at the bottom, right? Well, media fell below Congress. And in some ways, it's maybe good for folks like us, right? In terms of, if you can't trust big media, there's sort of it's like big tech and little tech, right? You and I, we talk about what we want to talk about. I mean, we have bosses, but we're not under a huge organization, and we have reach. So in some ways, I think that's good. But I think Bezos caught the understands that we're saying, if there's just no trust in the media, we need to rebuild that. And when there's so little trust in major sort of organizations and sectors, it's actually not healthy for the republic. You look at a news story, and the first thing I look at is who wrote this story. It's the first thing I think about, and then I decide, oh, can I trust them? The problem is most Americans, working real jobs, 40 hours a day, 60 hours a week, I should say, and they may not know all the sources of information. And it's kind of unfair to say you need to know where the information is coming from more than the information itself.
Yeah, no doubt about it. I will say, as a longtime journalist myself, unfortunately, cut subscriptions don't tend to hurt the Jeff Bezoses of the world. It tends to hurt the more rank-and-file journalists, especially investigative team units, of whom, listen, they've won Pulitzers for their reporting on January 6th and directly holding Donald Trump accountable. Outstanding journalism being done at a place like the Washington Post. An unfortunate story that we'll have to see how the dust settles on that one after the election. I do want to get your perspective. You're a precious metals pro here, my friend. We said you and I would talk gold this week. I want to talk gold. I checked it before we came on air. It's about 27.90 or so, up 34% year to date. Reminds me of Costco. That stock is up 35% year to date. Talk to me about what you're seeing in the world of gold right now, Tai Wong.
So gold is just it's a bull market, and it has carried out all the bears. Not only that, if you're long and you've taken profit, I've been long and I've taken profit, just so I thought I could get back in a little lower. No chance. This year's chart is from the lower left to the upper right. I don't know when it'll stop. It will stop at some stage. Will it stop? Where if Harris pulls one out, I think we'll get a pretty sharp correction.
So that's what how do you expect gold to move relative to next week's election?
So I think the view, and we talked about it yesterday, was a Trump administration, particularly if paired with a red Congress, will have probably a bigger deficit than a red Congress and Harris, who it'll be like Obama 2010 again. She's going to have to bite and fight for every single thing she has. So the deficit looks like it will be bigger if Trump gets in office. Now, whether that turns out the way it turns out, we can't be sure, but that's the market is reading it, and it's not an unreasonable way to look at it. So if you get a lower, sort of lower deficits and a deadlocked administration, or a deadlocked government, that there's less reason to own gold. There'll be lower deficits, potentially lower inflation, and time for a correction for gold. I think gold, a Trump win hasn't been fully priced in, but it's a big chunk of the way there. So right now we'll get a much bigger move in the markets on a Harris win than a Trump win, and I think gold is vulnerable to that. But until then, I think we're going to continue to get new highs. There has been talk over the past few months that the gold miners are going to hedge starting around 3,000. The gold miners really don't like to hedge because historically they hedged a generation ago and ended up having to buy back all their hedges in the mid-2000s as gold started to run up, because their shareholders were like, why aren't we making money? Gold's going up. Well, because we hedged everything. So they really try not to hedge, but at $3,000, I think some folks, especially if there are acquisitions or other things that require some kind of hedging, 3,000 is probably a pretty good place to do it, especially if you rallied $1,000 in a year or so. The other thing we've seen, silver appears to be breaking higher. I don't really want to stand in its way. Silver, I have a lot of respect for. I traded silver as well. You can make 10% in that, but you could lose 10% in that in a heartbeat. 2-3 days, that thing will move 10% without. It's a killer without compunction.
Wow.
The one thing on precious metals I do want to get to is we can bring up graphic 1 is palladium. Now, palladium is used primarily in catalytic converters in gasoline cars. And last week, when the Biden administration proposed a ban on limits on Russian titanium and palladium, it really caused the market to surge. But yesterday, we got up to above $12.50 briefly, and this morning, I think we're down close to $100. And I think we have more to go, because let's look at a chart. We talked about inverted hammers at the end of big rallies. So we've had big rallies over the course of the last year, 4 big rallies, and they all ended with a candle that had a long upper shadow. That means it traded very high and then closed much lower, suggesting buying exhaustion. Now, one of my favorite sort of candle charts, because it's a great signal about exhaustion at the top or at the bottom, but palladium, which trends very well, it works better than most. So I think we have a little more correction to go in palladium. It was a great way to look at the inverted hammer and why it's sometimes a powerful candle.
We got about a minute left. I want to get your sense on Bitcoin. It's currently pricing just under 72,000, to our point of ongoing rallies and all-time highs. What a fascinating asset story all the time, but especially in a week like this, a week out from the election.
We missed the all-time high by a smidge,
yeah.
by I think a little just under $200. It seems like it's going that way, although if we hold around just under the all-time high, you may get some profit taking. In terms of hoping that they can scoop it back a little cheaper, but a break of the all-time highs, you might struggle to get back in again. Like gold, I think Bitcoin is vulnerable to a surprise on election day.
On election day itself?
On the election, well, the
Yeah,
results
well,
of the election. I should
around
say,
the
yes.
results of the election. Oh man,
Yeah.
so this time next week we're going to be digging into BTC prices like no one's
Absolutely.
business. And we should be. We want to see that price action and get a sense about what that means with regards to the electoral outcome.
Yeah, next Wednesday could be absolute pandemonium.
Absolute pandemonium.
Pandemonium.
That's the theme. Should be the theme for the shows every time we do it. That's as I said yesterday, the great Tai Wong, and I do mean great. Thank you as always. Great to have you here. Wonderful show. Folks, coming up here on the show, a special segment with Chris Miller, Associate Professor of International History at the Fletcher School at Tufts University. Stick around. More show coming up after this.
The U.S. is more worried than ever before about the risk in which Chinese military power is growing. We see more and more Chinese exercises that are doing test runs to blockade Taiwan, for example. And if that were to happen, the results would be catastrophic, not only for the U.S., but for the entire world, because the entire world relies on Taiwan's chips. So there's a desire in the U.S. to have more chip-making capabilities outside of the Taiwan Straits to prepare in case that worst-case scenario does happen. And it probably won't happen, but it might happen. I started actually not planning to write a book on semiconductors. And as you noted, I'm a Russianist by background. My previous work has been on Russia. And I initially wanted to understand why was it that Russia fell behind technologically? Because during the 1940s and 1950s, by some metrics, Russia was actually quite capable of producing some of the key technologies, nuclear weapons, the space program, and others. And yet, decades later, Russia had fallen far, far behind. And it became clear to me that the key technologies that Russia fell behind in were related to computing power. And that got me interested in the question of how computing power is produced. And of course, it's semiconductors that make possible all of the computing we rely on today. And help me understand the extent to which the modern world, not just Russian history, but all history, has been structured by semiconductors. And so that's why I ended up deciding to write a book on semiconductors. Well, it was an inflection point because the Gulf War was the first time where it became clear to the typical person the ways in which computing was transforming warfare. For a long time in the 1970s and 1980s, there were military theorists who had realized that computing was making it possible to deliver ammunition with precision over long distances. But the Gulf War made it visible to everyone, because anyone who turned on their televisions during the Gulf War saw videos of bombs hitting targets with precision. And today, 30 years later, we take it for granted that bombs can hit targets with precision. But for most of the history of bombing, it was a matter of dropping lots of bombs because you knew most of them wouldn't hit their target. And so it was a big change, the development of precision, and it was possible only because of the application of semiconductor technologies to military systems. We stand at the moment where, on the one hand, chips are critical in all manner of devices, but on the other hand, the production of semiconductors is at an inflection point, I think, because governments around the world, almost every major government, is now getting more involved in the production of semiconductors, trying to shape how the industry is structured to the benefit of its company and its populations. This is most visible, I think, in the case of China and the United States, both of which are spending vast sums of money, deploying new regulatory tools to try to reshape the chip industry in their favor. And there's a lot of competitive dynamics at play there, but it would be wrong to only focus on China and the United States, because there are many other countries that are undertaking similar policies at smaller scale, whether it's Japan or Korea or Singapore or India or the European Union. All of these countries have new semiconductor strategies designed to influence how semiconductors are produced. And the challenge is that today there's not a single country in the world that can self-sufficiently produce cutting-edge chips. It's an international supply chain. And so governments are trying to influence a supply chain over which they have only partial control. And this is something that political leaders find very difficult to manage. I think there certainly is strategic logic at play here. The first is that although today most semiconductors that are produced go to civilian uses, semiconductors are still critical for military applications. And one of the trends of history, one of the laws of history, is that governments that have access to advanced computing capabilities inevitably deploy them for intelligence and military uses. And so governments realize that they have a lot at stake in making sure that they've got access to the most advanced semiconductor capabilities possible. And that's why we've seen over the past 6 months countries like the US, Japan, and the Netherlands try to cut off the transfer of advanced chip technologies to China. And it's also why we've seen China over the past 10 years invest very heavily in its chip industry, trying to reduce its reliance on imported chips and chip-making tools from abroad. And so it's easy, I think, for people in the industry or for people who are just looking at the industry to think only about smartphones or PCs or the consumer devices that use chips. Very important, of course, in terms of structuring how the industry works. But when governments think about the industry, they're thinking not only about smartphones, but also about military intelligence use cases. And that's been a key driver to this new wave of politicization of the industry that we've seen over the last decade. I would disagree somewhat. I think if you look at the countries where you have the most chip production, Korea, Taiwan, being best examples, these are not low-wage countries. wages are far higher than in Southeast Asia, than in South Asia, for example. So unlike many types of manufacturing, textiles or toys, chips are not that. Chips require lots of training, huge capital investments. And so it's, I think, not at all the case, actually, that labor cost differentials are a key factor. They're a factor in certain parts of the industry. So, for example, the assembly and test of semiconductors, which is the last step of the process of making a chip, that's often concentrated in lower wage locales. So Southeast Asia and China are major players there. But in terms of the fabrication of semiconductors, there's only a small labor input to fabrication because most of the cost is in buying the machines that actually make the chip. So I think you ask, why is it that certain countries have major chip industries and others don't? There are two answers. One is that government policy has played a role, and in both Korea, Taiwan, and China, which are newer entrants into the chip market, we've seen governments actively trying to support their chip industries. Now, in very different ways. I think the policies that the Korean government and the Taiwanese government pursued in the 1970s, 80s, and 90s was quite different than what China is doing today in terms of the focus. But nevertheless, governments did play a role. But second is that in a number of cases, Taiwan is the best example of this, there's a fair amount of randomness involved. In Taiwan, the country's chip industry is centered around one company, TSMC, the Taiwan Semiconductor Manufacturing Company, whose success is due not primarily to the Taiwanese government, although it has been very supportive, but rather to a unique business model that was thought up by a small number of people and implemented by Morris Chang, the founder. And so in some ways, Taiwan's critical role in the chip industry is a matter of randomness and happenstance. It was luck that made it possible for Taiwan to attract Morris Chang to set up TSMC in 1987. In addition to some policy, but there was a whole lot of luck involved, which is why Taiwan is such an important chip producer today. So I think we've got to recognize both the role that government policy plays, but also the extent to which, and there were some historical developments that weren't predetermined that shaped the industry and the structure it has today. Well, I think first off, I think that's a misreading of what went wrong in Japan's chip industry. And I think in Japan, there's some misremembering of the problems that Japanese firms actually faced. If you look at the Japanese chip industry, most of the firms in the 1980s were succeeding in winning market share by producing DRAM chips. And they were focused on market share rather than profitability. And so they won market share. They knocked almost all US DRAM producers out of the market. And they kept focusing on winning market share. And so in the end, there was hardly a single Japanese DRAM firm that ever made much money because they were constantly trying to expand capacity. In the process, they drove down the price. In the process, they drove down their own profitability. And as a result, most of the big Japanese firms, Toshiba, NEC, and others that were producing DRAM were unprofitable over a very long time horizon. And while they were trying to win market share in these low margin chips that they were producing because they'd flooded the market, they missed some really critical shifts in the market. So for example, the microprocessor took off in the 1980s at a time when Japanese firms were fixated on DRAM. And Japanese firms completely missed the microprocessor because it was a small volume product at first. It didn't fit their business models. And so I think actually the key failing of Japanese industry was not to find a functional business model. And so by the time they reached the 1990s, they had vast market share, but no profitability. And it was relatively straightforward for firms like those in Korea to come undercut Japanese firms at cost, rapidly win market share. And the Japanese firms had nothing to fall back on because they'd never been profitable and had only focused on DRAM. So I think that it's critical to remember what actually went wrong with the Japanese industry, because actually the US response to Japan in the 1980s played a very small role, if any, at actually causing problems for Japan. And I think it's arguable that the types of voluntary export restrictions that the U.S. Convinced Japan to adopt, they helped Korea a lot, actually, Korean firms. They probably hurt U.S. firms because it drove up the price of semiconductors in the U.S., making it more expensive to make computers, for example. And Japanese firms, they never faced the problem of having insufficient market share. They faced the problem of insufficient profitability. And it was other Japanese firms that were overproducing, driving down prices, and making the entire segment non-profitable. So I think that's important to recognize, because when we look at today, that really is a situation that no country finds itself in except for China, interestingly, because today it's Chinese firms that are building out capacity in a really vast way, subsidized by the government, without any regard for market forces. And so I actually think it's China that's most likely to replicate the Japanese experience, not at leading edge chips, but at lagging edge logic, which is where China's building out its capacity. And I think it's quite possible that Chinese firms end up in exactly the same problem that Japanese firms face, having large capacity, no profitability, and therefore not much future. There are two goals that policymakers in Washington have. And the first is they want to maintain and ideally grow the gap in capabilities between what is possible to produce outside of China and what's possible to produce inside of China. And today, if you look at the production of advanced semiconductors outside of China, you find that it's several generations ahead when it comes to logic chips. And several generations ahead when it comes to DRAM chips, maybe slightly less when it comes to NAND chips. And the U.S. goal is to keep that gap in place. Now it's complex because, of course, the U.S. alone doesn't produce the most advanced chips. You can only produce advanced chips by using machine tools from the U.S., Japan, and the Netherlands, materials from Japan, fabrication in Taiwan, et cetera. So there's a coalition of countries whose tools and intellectual property and expertise is needed to make advanced chips. But the U.S. wants these capabilities to stay meaningfully ahead of China's for the military reasons that we discussed. That's one. Second is that the U.S. is more worried than ever before about the risk of a Chinese attack on Taiwan. Not that it's guaranteed to happen, but that the likelihood is meaningfully higher than it was a couple of years ago. Chinese military power is growing. We see more and more Chinese exercises that are doing test runs to blockade Taiwan, for example. And if that were to happen, the results would be catastrophic, not only for the US, but for the entire world, because the entire world relies on Taiwan's chips. So there's a desire in the US to have more chip making capabilities outside of the Taiwan Straits to prepare in case that worst case scenario does happen. And it probably won't happen, but it might happen. And if so, we need an insurance policy as to where we're going to get critical semiconductors for economic, for defense purposes. And that's why the US has been putting money into its own chip industry via the CHIPS Act. And it's also why the US has been very supportive of Japan and Europe and others doing the exact same thing, because more chip making outside of the Taiwan Straits reduces the risk, reduces the cost if in fact there is war, if in fact China does blockade or attack in some sort of way. And so those are the two goals that the US government is pursuing right now. Well, I think it can last for, I don't know how long is a long time, but half a decade or a decade, I think it can last. I think it lasts for the following reasons. First off, today, China is a big producer of low-end chips, but it's actually a small player in the chip industry when you look at revenue share. So if you look at dollars spent on the chip industry, China is a smaller player than South Korea, smaller player than Taiwan, smaller player even than the Netherlands. And so what that means is that although China's market is vast, China has no choice but to import lots of chips because it can't produce advanced chips at home. And so it's going to keep importing chips from Taiwan and Korea and elsewhere. And the US strategy is not to stop that. The US strategy is to make it more likely that China has no choice but to import chips. What the US wants is for China to remain far behind and therefore to keep buying chips from abroad. The Chinese strategy is to do the opposite, is to catch up technologically and then stop having to buy chips from Korea, from Taiwan, from elsewhere. And what we've seen in every other industry is that the moment Chinese firms reach a technologically advanced level, they immediately stop buying from abroad, cut out their foreign imports, and produce domestically. And so the US goal is actually to stop that process and to keep China dependent on chips from Korea, chips from the US, chips from Taiwan. And so there's actually an interesting overlap between the commercial interests of companies in these countries and US policy, because the US wants China to stay reliant on these companies' chips. I think there's a number of companies, including Samsung and SK, that are trying to find a new strategy for facilities in China. I think almost all of the foreign companies that had chip making facilities or assembly facilities in China had already decided before this October that they weren't going to invest more in these facilities. There had already been a big shift in the industry that they wanted to keep open facilities in China, but they didn't want to expand them. And so I don't think that the new rules are going to have a major impact on stopping expansions, because no one is planning to expand in the first place. But it's certainly true that that companies that use certain types of advanced US machines in China have to apply for licenses every single year. And my understanding is that several of the companies involved have been in discussions with the US government about trying to find a approach that will give them more of a time horizon to wind down their production in China. And that's an issue that I think has to be dealt with. And it's important that it's dealt with in a way that does not impose undue costs on companies that are operating facilities in China. I think next to that, though, the part of the October controls that doesn't get discussed nearly as much in Korea is that the US imposed controls on a number of Chinese firms that were poised to become major competitors to Korean firms. And this was most visible in the market for the production of NAND memory chips, in which Korean firms play a big role. YMTC, which is the leading Chinese producer of NAND memory chips, was just about to become a major player. Apple was actually reportedly testing out its chips for use in the iPhone. And as of October, the US has imposed very strict controls on this company, limiting its ability to acquire machines. And I think it's likely that that these controls are going to set back YMTC sometime, and thereby reduce competition, subsidized competition by the Chinese government in the market for NAND chips. And so this has been a benefit for any producer of NAND chips, but especially the two Korean firms that do. And so if you ask what's the net effect of the controls on Hynix or Samsung, it's actually a very complex question, but it's not obviously negative. And the goal, as I mentioned, is for China to have no choice but to be so far behind that it has to buy lots of chips from Samsung and Hynix far into the future. We already see that happening to some extent. And I think part of the goal of US strategy is to bring together a coalition of countries that are aligned on their policies and therefore somewhat resistant to China's desire to use its market as a tool of leverage. But I think next to that fact is the reality that China is going to become a less important consumer of semiconductors going forward. And I'll explain why. Today, China is around 20% of the world's economy, but it's a far more important consumer of semiconductors because lots of chips are sent to China, assembled into phones or PCs, and then re-exported abroad to America, to Europe, to Japan. But that assembly business it's already changing, and it's going to keep changing. We see all of the firms that manage the assembly process of phones, for example, are investing less in China and more in India right now. Samsung is actually the leader of this. It moved much of its assembly outside of China some time ago to Vietnam. Now the rest of the industry is beginning to follow. And so I actually think that China will become somewhat less important a buyer of chips because we're going to have more of the assembly of electronic devices in other countries, in Vietnam, in India, in elsewhere in Southeast Asia. for example. And so it's actually possible that over the next decade, China begins to look like a less important buyer of chips. Still very important, still a big market, no doubt. But it's worth remembering China is 20% of global GDP, and the rest of the world is 80%. And the rest of the world market is still more important than the Chinese market. I think the key thing to realize is that the U.S. policy is not really asking Korea to make a choice. That the goal is for Korean firms to be able to keep selling to China, but rather to keep their technology in Korea. And it seems to me that that actually suits Korean interests very well too. If Korean firms produce less in China, more in Korea, but if they keep selling commodity chips, memory chips to China, and more effectively protect their technology from efforts by China to acquire it, I think that's both in the interests of Korea and in the interests of the US. And so I actually don't see, I think there are certain very specific areas where there might be differing interests between the US and Korea. But when you zoom out, I think both countries are aligned on the fact that they want to protect their core technologies. Both countries are aligned on the fact that they would like to have more of their companies' production in Korea and less in China. And both countries are aligned that it's an optimal situation if for commodity memory chips, China remains reliant on imports, in particular imports from Korea.
And that's going to do it for Global Money Talk, live from the trading floor of the New York Stock Exchange. We are so excited to bring you daily coverage right here on SamPro TV. As always, you can check out the show anytime over at our YouTube channel by searching Global Money Talk. Thanks as always for taking the time to join us. We'll be back here tomorrow with a whole new show. Have a great day, and we'll see you then.